Are you tired of paying a high tax bill? Then this is the episode for you, okay? To all of my pharmacists, nurse care practitioners, physicians that are listening, my high net worth individuals, you got to. You have to. It's not optional anymore. It's a must. You have to get you somebody who is informed and knowledgeable on strategic tax preparation, okay? This is something that I absolutely love doing. I love reading the IRS book. I love learning different strategies I can implement to help lower my taxable income. And I'm going to talk about myself on this episode. I'm going to be real with you. Last year, I had to pay $1,000 in taxes, and I made more money this year, but yet I'm getting back $4,600. Okay. I made more money this year, but I'm getting back more compared to last year because of strategic tax planning. All right. So on this episode, I'm going to give you all three tips I need you to implement. One of them you probably already heard, and that is to max out the 401k. Last year, I contributed a lot more to my 401k than I did the year prior. That made a big difference when it comes to taxable income. All right. And I actually realized if I would have maxed out my 401k, I would have gotten probably another $2,000 back in taxes because it actually would have lowered my taxable income from the 24% tax bracket to the 22% tax bracket. So I was like, dang, I could have got more money by putting it into my 401k. And if this goes above your head, please just reach out. We'll set up a consultation. We're here to help, okay? But I got to plant some seeds. And if it's going over your head right now, that's okay. You got to learn. You got to become knowledgeable about these things. And if you don't want to become knowledgeable about these things, that's when you pay the fee. That's when you hire a financial planner. That's when you reach out for the wealth consultation and we go ahead and break down different strategies that you could implement to help lower your taxable income. So, of course, maxing out the 401k, which I actually didn't do last year, but I plan on doing this year. That's number one. That could really help lower some of us pharmacists from that 24% tax bracket to that 22% tax bracket, which could have given me probably an extra $2,000 to $3,000 on this year's tax return, which is crazy. It's crazy to think about. Just that little bit, maxing it out, could have saved me. Well, not saved me, would have given me more money back at the end of the year. So that's tax tip number one. Number two, you have to remember that from 2025 all the way through 2028, we are not being taxed on up to $12,500 on OT. I work for an employer that gives overtime, okay? And trust me, I accrued a lot of overtime last year and the year prior. And this year, I'm still accruing overtime, all right? They offer a lot of overtime. But one of the things that was interesting was my employer didn't mark it on the W-2, okay? This was a new law that was put in place during the year by the Trump administration, okay? So a lot of these corporations didn't have the opportunity to add it to their W-2. So I spoke with HR, and they actually informed me that on next year's W-2, so 2026 W-2, there will be a separate section for overtime, for your overtime. Just like you have a certain section for the amount of wages, the amount of money you contribute to your 401k, the amount of taxes that you withheld or didn't withhold, like that's all listed. It's also going to list how much money you made from overtime. But for most corporations, the W-2 for 2025 will not have that. So if you did accrue overtime as a pharmacist, as a healthcare practitioner, please inform your tax preparer, your CPA, that you did accrue overtime and how much you accrued. So what I personally did, I sent my last wage statement. So my wage statement, I think it was 2026, I think was like our last paycheck for the year. So I sent that one to my tax preparer so they can see how much overtime I accrued, because it's usually on your wage statements. So definitely make sure you do that and you inform your CPA how much of your income or how much money you made from overtime. $12,500 is the limit for single filers, and if you're a joint filer, it will be $25,000, okay, that you should not be getting taxed on. So that's something that made a big difference because I've had overtime last year and I had overtime the year before. That helped make a big difference from having to pay $1,000 in taxes to getting back $4,000 in taxes, all right? And then the third tip I need you guys to do, please, please, please make sure to do this, okay? I was literally just reviewing my taxes and I realized my tax preparer forgot to fill out one form that's vitally important. Form 8606 to all of my high income earners that are doing a backdoor Roth IRA. You have to make sure that that document is filed and included in your tax return. The reason why is because it will impact how much money you pay in taxes, or it will impact how much money you get back in taxes. So I was only supposed to get about $3,000 back. But by reaching out to my preparer, my tax preparer, and saying, hey, we missed out on this document. You need to include this document. And they realized that they missed it. It wasn't included. They went ahead and redid it. And now my tax return goes from $3,000 to $4,600. I'm getting $1,600 extra just by making sure one form was documented. So for the tax year 2025, if your modified adjusted gross income is greater than $150,000, that is when you start to get phased out. Okay, it's called a phase out process. So 150 to 165,000, you start getting phased out. And if you make over $165,000 a year, not overall, but your modified adjusted gross income, if that is greater than $165,000 as a single filer, you're not supposed to be able to contribute to your Roth IRA. You're not supposed to be able to do it. However, there is a strategy to where you can do a backdoor Roth IRA. So if anybody wants to learn how to do that, please feel free, reach out, pay for the consultation. Trust me, these things that you're doing today, trust me, will make a significant impact in the future. $1,600 back just by making sure a form was entered on my taxes. That's going to be a trip, I promise you. Maybe it's going to be Peru. Maybe it'll be Norway. That might be a trip, I promise you. Or if it's not, trust me, I'm going to invest that money. And me, on average, I think I usually get a 30 to 40% return year over year with my investments. Trust me, in about 5 to 10 years, that extra $1,600 is going to be something significant. We're definitely talking over $10,000. And then it will for sure be a trip. So the reason why I stress these things, the reason why I want you guys to be a little bit more knowledgeable, and if you don't want to learn it, consult somebody, hire somebody to give you the information that you need to implement, to go ahead and get this done. And that's where we come in to help you all right? So do not forget, tip number 3, please, 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 if you do the backdoor Roth IRA strategy, make sure Form 8606 is included on your tax return. And remember, it is for those individuals whose modified adjusted gross income is greater than $150,000, because that's when you start to get phased out. But to avoid that, you could do a backdoor Roth IRA. And if you need to learn how to do that, please do not hesitate to reach out to us. You can email us, capsulerxpodcast@gmail.com. Reach out to us on Instagram. Reach out to us on LinkedIn @new_CapsuleRxPodcast. We're here to help, and we want to ensure that if you are listening, if you are a dedicated fan, if you are one of our clients, that not only do you get to keep your money, you also get to grow your money. So that's what we're focused on. So with these 3 tips, not only are you keeping more of your money, you're getting the opportunity to have that money grow for you by investing it. You're having the opportunity, and it doesn't have to be the stock market. It could be real estate. It could be buying a business. It could be investing in your own business. It could be different things like that. I always tell people there's different types of investments. The only wrong decision is not investing at all. That's it. Pick the investment you want to master. Airbnb, real estate, doesn't matter. Stocks, crypto, gold, silver, doesn't matter. But you got to invest in something. Otherwise, you'll be working until you die. I don't care how much money you make. You always have to invest in something. All right. So 3 tax tips I just gave y'all. Let's run it back. Number 1, you need to max out your 401k. And if you want to know what to invest in your 401k, reach out. Pay the fee. Trust me. Trust me. Trust me. It's worth it. Trust me. It's worth it. I've seen my returns. It's worth it. Trust me. Max out the 401k. Number 2, you have to make sure that if you made any money from overtime, especially if it's under $12,500, that your tax preparer is informed about it, because most likely it is not on your W-2. So you're going to have to tell them, send them your last pay stub, your last wage statement, so that way they can include it. So that way you can get more money back. Or if you are paying money, you're paying less money. Okay? That's what this is all about. Keep more of your money. And then number 3, everybody talks about the Roth IRA, how impactful that is. If you start investing at 30 years, and if you do it over 25 years, you'll be a millionaire by 65 if you just contribute $7,000 into VOO and blah, 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 blah. Guess what? Even as a high income earner, you can still contribute. You just have to do the backdoor strategy. And if you need assistance with that, we're here to help. All right. So do not forget that your tax preparer has to input form 8606, or you will be losing money. Okay. You're either going to have to pay the IRS, or they're going to just keep more of your money. And I don't want neither of that to happen to you. All right. 3 tax tips I want y'all to implement. If you have any questions, we're not hard to find. Reach out to us on Instagram, LinkedIn at @new_CapsRx podcast, or just straight up send us an email, capsrxpodcast@gmail.com. Thank y'all for listening. I hope you have an incredible day. And by the way, if you haven't yet, please, please treat yourself. If you're listening to this, you got to treat yourself. All right. I just went on 2 trips, had an incredible time. Please, I want y'all to treat yourselves. All right. So definitely take a little bit of the tax refund if you have some, and do something nice for yourself. Okay. Remember, you got to live a little. It's not all about investing. You do need to live a little. So anything we can do to help, you know where to find us. Later.